Dear students, today we will discuss chapter number 2, Overview of Income Tax in India, in subject Tax Procedure and Practice, paper 1 for first year BCom semester 1, Veer Narmad South Gujarat University. Here is the outline of the lecture. First of all, we will discuss brief history of income tax in India. Then we will see sources of income tax law in India, and we'll discuss about tax planning, tax evasion and tax avoidance. And finally, we will see the differences of tax planning, tax evasion and tax avoidance. Let us see the brief history of income tax in India. In India, income tax was introduced for the first time in 1860 by Sir James Wilson in order to meet the losses sustained by the government on account of the military mutiny of 1857. In 1918, a new income tax act was passed, and again it was replaced by another new act which was passed in 1922. This act remained in force up to the assessment year 1961-62 with numerous amendments. Amendments means necessary changes in the law or act. In 1961, in consultation with the Ministry of Law, finally the Income Tax Act 1961 was passed. The Income Tax Act 1961 has been brought into force with 1st April 1962. It applies to the whole of India, including Jammu and Kashmir. Since 1962, several amendments of far-reaching nature have been made in the Income Tax Act by the Union Budget every year. At present, there are 23 chapters, 298 sections and 14 schedules in the Income Tax Act. Now let us see the sources of income tax law in India. First is Income Tax Act 1961 amended up to the date. Second source, Income Tax Rules 1962 amended up to date. Third source, the Finance Act. Number 4, circulars and clarifications by CBDT, that is Central Board of Direct Taxes. And last, fifth source is judicial decisions. Now let us discuss one by one all the sources. First source, Income Tax Act 1961. Income tax in India is governed by the Income Tax Act 1961. It came into force with effect from 1st April 1962. The Act contains 298 sections and 14 schedules. The Finance Act shall bring amendment to this Act. The law provides for determination of taxable income, tax liability, and procedure for assessment, appeal, penalty, and others are provided in the Income Tax Act 1961. The second source is Income Tax Rules 1962 amended up to date. The administration of direct taxes is vested with Central Board of Direct Taxes, that is CBDT, under section 295 of Income Tax Act. CBDT is empowered to frame rules from time to time to implement the amendment in tax provisions for proper administration of the Act. All forms, procedures, and principles of valuation of perquisites prescribed under the Act are provided in the rules framed by Central Board of Direct Taxes. The third source is the Finance Act. Finance Minister presents finance bill in both the houses of Parliament. Once the finance bill is approved by the Parliament and gets the assent of the President, it becomes the Finance Act. The rate of tax at which income shall be charged is prescribed in the Schedule 1 of Finance Act. The Finance Act brings amendments to both the direct tax laws and indirect tax laws. Our next source is circulars and clarifications by CBDT. In exercise of the powers under Section 119, CBDT issues circulars and notifications from time to time. These circulars clarify doubts regarding the scope and meaning of the various provisions of the Act. These circulars act as guidance for officers and assessees. Here assessee means a taxpayer. These circulars are binding on assessing officers but not on assessees and court. The circulars issued by the CBDT shall not be in contrary to the provisions of the Act. Our final source is judicial decisions. The Supreme Court and the High Court can give judgment only on the question of law. The law laid down by the Supreme Court is the law of the land. The decision of High Court will apply in the respective states within its jurisdiction. Now let us understand three most important terms in the chapter: tax planning, tax evasion, and tax avoidance. First, tax planning. Tax planning is a way to reduce tax liability by taking full advantages of various exemptions, deductions, rebates, and reliefs provided in the Income Tax Act. It is a way to reduce tax liability by applying script and moral of the law. Number 2, tax evasion is the illegal way to reduce tax liability by deliberately suppressing income or sale or by increasing expenses, etc., which results in reduction of total income of the assessee. Here assessee means a taxpayer. Tax evasion is illegal both in script and moral. It is the cancer of modern society and work as a clog in the development of the nation. Third point, tax avoidance is an exercise by which the assessee legally takes advantages of loopholes in the Act. Tax avoidance is a practice of bending the law without breaking it. It is a way to reduce tax liability by applying script of law. From the above discussion, we can say that tax planning is a legal practice or a legal activity, whereas tax evasion and tax avoidance both are illegal activity done by the SSAs. Now let us see the difference between tax planning, tax evasion and tax avoidance. Point of distinction, that is difference. First is difference in definition. It is a way to reduce tax liability by taking full advantages provided by the Act through various exemptions, rebates and relief. That is known as tax planning. Tax avoidance. It is an exercise by which the SSC legally takes advantages of the loopholes in the Act. Tax evasion. It is an illegal way to reduce tax liability by deliberately suppressing income or sale or by increasing expenses, etc., which results in reduction of total income of the taxpayer, that is SSC. Feature. Tax planning is a practice to follow the provisions of law within the moral framework, whereas tax avoidance is a practice of bending the law without breaking it, and tax evasion is illegal both in script and moral. Benefit generally arises in a long run. Tax planning is beneficial to the SSC in a long run. Benefit of tax avoidance is generally for a short run. Generally, benefits do not arise, but it causes penalty and prosecutions in the case of tax evasion. Next point of difference is treatment of law. It uses benefits of the law in the form of exemptions, rebates and relief, whereas tax avoidance, it uses loopholes in the law, whereas tax evasion overrules the law. Next point of difference, practice. It is tax savings in nature. It is tax hedging in nature, and it is tax concealment in nature. And need, it is desirable. Tax planning is a desirable activity or a practice by an SSC. It is avoidable. Normally, SSC should avoid tax avoidance. It is objectionable. It is objectionable because tax evasion is illegal. And last point of difference is morality. It is moral in nature. It is immoral in nature, and the tax evasion is illegal. Dear students, here we end the few topics of chapter number 2, a brief overview of income tax in India. Thank you very much for watching this video lecture. Very soon we will meet with new topics in same chapter in income tax. Thank you very much.